Hi everybody, I hope you are having a great day, and as you have probably seen, we have a lot of things going on these days on the markets. But as always, I would like to start with my portfolio. As you can see, there are some changes. I have recently bought 3 stocks of Google. I simply couldn't resist because markets have sell off around 7%, and as I have already told you, around 80% of my portfolio consists from cash. You cannot see that at this moment on this portfolio because some of that cash is on my private account, but I will transfer it in the next month or two and you will be able to see all 30,000 of US dollars. So since I had around 80% of my portfolio in cash, I wanted to deploy some of it and I have bought 3 Google stocks. Of course, they kept falling, but I still have around 60% of my portfolio in cash and I am looking forward to this correction. Of course, you cannot forecast prices, you cannot forecast stocks, indexes, so you never know when the tide will turn and when this fall will stop, when stocks are going to start rising again. So I simply wanted to deploy some of my cash. Something else happened in the last 2 days. US dollar compared to euro fell around 2%. So since my holdings consist from some European stocks and from some euros, actually I had on that side 2% gain in the last week. I will discuss reasons of investing in Google stock, but let's check my 2 other charts. First of all, on return chart you can see that all of my gains in 2020 have melted and I'm sitting now at around 0%, while S&P 500 went down around 7-8% at the moment of recording this video. So I'm quite happy with outperforming S&P 500. On my profit chart, you can also consequently see that I have earned around $10 this year in total. But when you take into consideration movements on the market, I'm quite happy with this performance. Let's move on to my last investment. So why Google? Why did I pick Google from all the stocks that have fallen in recent several days? Well, I have a lot of stocks on my watch list which I'm tracking, and there are a lot of companies with great balance sheet, with great moat, with great business. But I have picked Google for several reasons. For the start, Google have PE ratio of 28. If you compare that with all the other tech giants whose revenue and profits are growing, like Microsoft, Facebook, Amazon, Google is the cheapest stock right now. I'm not comparing Google with Apple because even though Apple has lower PE ratio, revenue and profit of Apple are shrinking at this moment. So if you check trend of revenue and profit growth of the Google, you can still see that those numbers are growing steadily at double-digit rates. You can see these revenue numbers in the last 5 years and gross profit numbers in the last 5 years. If we calculate gross profit margin, you can see that it is shrinking in the last several years by modest pace. For example, in 2015, gross margin was 62%, and in 2019 it was 55%. Some of the reasons of those margin compression is coming from all those personal data protection initiatives that are coming from all over the world, from GDPR in Europe to CCPA in California, because of which Google has to employ a lot of new employees. Another risk for Google is Amazon. Amazon is impacting Google's search results and revenue numbers because some of the small businesses are switching from Google advertising to Amazon advertising. That is another risk which might impact Google's growth numbers in the future. There are 2 more potential risks for Google which I would like to emphasize here. One is evaluation. So Google, even though it has fallen around 8% from all-time high price, is still not cheap at all. And it still has rich valuation. But as I have already explained, I simply had 80% cash in my portfolio and I wanted to diversify a little bit by investing in some company. And from all of the companies that I have on my watch list, Google seemed the best option for me. It kept falling after I have invested, and obviously I should have waited a little bit more, but I still have 60% cash in my portfolio and I'm looking forward to new opportunities that markets could present to me in this correction. And the last potential risk for Google is political risk. Because Google is one of the most targeted companies by politicians. Whenever they are speaking about private data protection, about safety of the people, they are accusing big tech companies like Google, Facebook, etc. And since this year we are going to have US elections, I bet there will be a lot of politicians that will be attacking Google and threatening to it so they can gain some political points. But to end this discussion about Google on the positive note, their revenue, their profits are still growing nicely with double-digit rates. Their balance sheet is looking better and better every quarter. They sit at around 120 billion US dollars of cash. They also have authorized share buyback program, which is around 25 billion worth. Their YouTube ads are growing at almost 40% year-on-year basis. Google search is still growing at 15%, even though it is being attacked by Amazon and other competitors. Google Cloud is growing at huge year-on-year rate with more than 50% revenue growth. And there are also other bets in Google like autonomous vehicle, which might present additional revenue stream in the future. And as you can see, Google is diversifying, Google is looking for the new revenue streams, and I'm quite confident that you cannot miss long term with this company. Because every single year, budgets for digital marketing are growing, and in that space you basically have only two options, Facebook or Google. So let's move on reviewing what is happening on the markets these days. So coronavirus is still holding all headlines in the world. Several countries have closed all the schools, like Japan, South Korea, and in most of the others, all public gatherings are cancelled. All the media is counting number of infected people, number of dead people. Consequently, a lot of people are panicked. My opinion is that people are not rational and that they haven't informed themselves about this disease, and most of the panic is without actual reasons. As you can see on this S&P 500 chart, it is looking really ugly. All of the sectors are falling, from tech companies to traveling industry, retail, everything is getting hammered these days. If you look in this infographic, you can see some real numbers. So everything started in Wuhan, and around 70,000 people got disease in a city of 11 million. So in 3 months, 0.7% population got infected. Of course, we can argue if all the informations that are coming from China are correct, but for now let's stick what we do know. So in 3 months, from 11 million people, 77,000 got disease. From those 77,000 infected people, 10,000 of them are healed, completely healed and no longer have disease. And from those who died, if you are 80 plus years old, your chances of death from it are 0.1%. If you are under 45 years old, your chances are 0.0028%. What about if you are 35 years old, for example? Your chances of dying from it are 0.0014%. And if you are under 9 years old, 0. So nobody under 9 years old died from this disease. That means if you are 80 plus years old, there is 99.9% that you will not get it and die from it. If you are under 40, then there is 99.9986% that you will die from it. So if you would look these numbers objectively, I think there wouldn't be any reasons for anybody to panic, to cancel their vacation, schools, or any other activities that have been planned. But people are not looking at these numbers, people are looking at the headlines of news, which are creating the hysteria. And then what we do have is big consequences in the economy. More and more companies are reporting that they will have big impact in their next quarterly earnings from coronavirus. There are a lot of disruptions in production. For example, you can see on this chart that shipments of mobile phones in January in China plummeted 40% on year-on-year basis. That's a huge number. You can also see this chart of time taken for S&P 500 to correct 10% from peak. Last week we've actually break the record. It only took 6 days for S&P 500 to correct 10%. The biggest reason, of course, is uncertainty. Nobody knows how big of the impact is coronavirus going to have on the economy, and how long are people going to keep panicking about it. If factories are going to stay closed, we will have supply disruptions. If we will have these supply disruptions, we will have big impact on quarterly earnings, and that could start the recession. That is actually the biggest fear that is ruling on the markets these days. Soon we will start getting macroeconomic data for February, and then maybe we will be a little bit smarter. But for now, all you can do is not to panic and keep following numbers and not the news, because news are only trying to get as many clicks as they can. I personally will wait before I invest additional amount of money in stocks, because if this panic continues, we might get really nice opportunities for long-term investments soon, because I'm 100% confident that at the end we will get over it and everything will get back to the norm. Okay, thank you very much again for watching my video. And please let me know in the comments below, what do you think about my investment, and when are you going to invest additional money in the stock market? Do you think that this correction is over, or are we going to have more drops in the stock prices? See you in the next video. Bye.